Over the last few years, we have seen a steady increase in startup funding across Africa. In 2021, African startups raised a record high of over $4.5 billion. And of that $4.5 billion, Nigerian startups raised over $1.3 billion. We asked Inye Abuyeje, the co-founder of Andela, Flutterwave, and now general partner of Future Africa, on why he believes there is so much startup funding coming into Africa.
I chose Africa because it remains the area of greatest promise when you look at the global economy. So I don't actually think the reverse. If I was American, I would still be making my way here, because if you think about where you have the opportunity to, over the next 20 to 50 years, still play a huge role in shaping society and leadership in society and so on and so forth, I think you get the picture.
While all the news of growth and financing for Nigerian startups are great, when you take a closer look, you begin to ask if these Nigerian startups are really Nigerian. Flutterwave is a fintech company co-founded by Nigerians, operational in Africa, and headquartered in San Francisco, California. Jumia is an e-commerce platform co-founded by a Canadian, Kenyan, and Nigerian, operational in Nigeria and headquartered in Berlin, Germany. Trade Depot is a B2B e-commerce and embedded finance platform founded by a Nigerian, operational in Nigeria and headquartered in Lagos, Nigeria. The question then is it the ownership, location of incorporation, or operation of a startup that determines which country the startup belongs to? Is a Nigerian startup headquartered in Delaware really a Nigerian startup?
When people say, this company is not a Nigerian company, I don't know. I don't believe it. I think for three reasons. One, a market are the people it serves. If you have founders that are Nigerian, and you have a market that's Nigerian, you have people that are Nigerian. I don't know how you could make the case that the company is not Nigerian.
Why is it important to pay attention? Small and medium enterprises, SMEs, make up the bulk of a country's global GDP. According to Smedan, over 40 million micro SMEs exist in Nigeria, employing over 80% of the country's population and contributing about 50% of the country's GDP. While all startups are SMEs, most SMEs are not startups. What differentiates a startup from a typical SME is that startups are designed to grow very big very quickly. A startup would typically achieve in 1 to 2 years the growth a traditional business will achieve in 5 to 10 years. This kind of growth could transform entire economies, as we have witnessed in the US with the likes of Google and Microsoft, and China with Tencent. In the same vein, Nigerian startups have the capability to transform Nigeria's economy and raise the standard of living. But the need for them to grow very big and very quickly is why they need external funding from angel investors and venture capital. Of the over $4.5 billion raised by African startups in 2021, more than 85% of that was foreign funding. We asked Ayomigbe Teriba, a venture capitalist and analyst at Ingressive Capital, why we have had more foreign funding than local funding in the African startup space.
Money follows money. Like, where there's a chance to make more money, money is going to go there. So it's like global businesses are coming here because we are beginning to show that what we are building is scalable. Hence, they need to put more money on it to make it more scalable. So foreign investors would always come, and the thing is, they come because they have a deeper pockets than African investors.
Foreign funding is not bad. In fact, it is encouraged.
We need funds that are focused, to scale, show the international community that we're actually building innovation here, and then they can come in with their mega bucks and kind of help us scale it further.
But if Nigerian startups have to turn to foreign funding at the early stages, Nigerians must be aware of the potential problem of massive leakage of creative value and national security. What do we mean by leakage? When a foreign investor invests early in a Nigerian startup, it means that when the startup succeeds, a large portion of the value created will be shipped abroad, and the effect will not be felt in Nigeria, where the operation is being carried out, mimicking the reality of the colonial times when our cash crops were shipped outside the country after we did the hard work of cultivation. The next question then is, why don't these foreign investors incorporate these startups in Nigeria since the operation is right here?
In the US, because of the system of governance they run, states are allowed to have some very interesting boundaries that they can set rules and regulation on, as includes cooperation and licensing and state rules, state laws. Delaware beats all other states in the US for international incorporation. And it's because the Delaware laws are simple for companies, straightforward. The Delaware laws were set together with private and public players coming together to do policies that work for the both sectors hand in hand. The taxes are straightforward. The channel for you to sell and hand over companies from one end to the other is straightforward. And then the pathway to list, which is if you're not going to sell your company, you go to IPO, the pathway to list your companies on the best stock markets is straightforward. So a lot of times when I say international corporation, people think it's only Delaware. No, you have Delaware. In Africa, you have Mauritius. There's Isle of Man. In international markets, you have Singapore. You have the Chinese market, which is majorly Hong Kong stock market. You have the biggest financial hub in the world, London.
Citing potential breach of national security, the US government under the Trump administration attempted to force Chinese tech giants ByteDance and Tencent to localize their US operation and sell both TikTok and WeChat respectively to American investors. In the same vein, governments around the world ban foreign investors to protect the local economy. A notable example is the ban of most US tech companies like Google in China. So it is very clear that the Nigerian government has a role to play in protecting the value created by these startups so that the effect can be felt within the country.
For African kind of government to be able to attract more people, work with the courts, do great policies, incentivize your people, hear their complaints, do something, move the needle. I mean, if people talk about police, do reforms. If people talk about exploitations, do. If people talk about fraud, find ways for us to kind of narrow down the fraud. African government needs to start looking at African population as the most viable asset. The world has recognized that Africa is going to have 70% of the world population by a particular year. This is the right time for us to now start looking for ways to incentivize people to remain here, work here, domicile their things here, than hounding them.
Besides the contributions of the government, we also have private VCs taking steps to help localize more and more of these startups, as we see in the case of Future Africa with their ongoing project called Talent City.
Well, the big idea with Talent City is to eliminate one of the primary reasons why startups find it necessary to incorporate abroad, and investors encourage it. Just to put it very bluntly, when you think about the rule of law, when you think about the legal infrastructure available in Nigeria for multi-billion, multi-million dollar investment, it's extremely poor, right? It's not global standards. So most people would default to the US, where there's an established case law going into hundreds of years, establishing all these things, right?
Yes, sir.
So
Nigerian founders and startups should not have to look outside and struggle for their idea, especially at seed stage funding. Thankfully, there are increasingly new angels and ventures focusing on providing seed capital from local investors. One of such is Get Equity.
Get Equity works in, I think, very easy steps. I mean, so think of it like you would invest in the stock market, right? You're able to buy and sell shares in a company. It's the same thing with Get Equity. Now the only difference is that you're buying and selling shares in a private company, which is maybe a startup. Now for the company in itself, think of it like you would list on a stock exchange, and anyone could invest in that company for as little as $10 with the click of a button. Get Equity is about 7 months. And I think as of last year, companies were able to raise almost $400,000, mainly from Africans or Africans in the diaspora. I mean, they make up pretty much about over 90% of our customer base right now.
With all this said, what does the future of Nigerian startup financing look like?
African investors will step up, which is like you start seeing people that invest in traditional businesses see startups or technology companies as an asset class they should diversify into. And I mean, big ups to CBN. There are different regulations. I mean, there are different kind of conversations that have been happening to self-living institutions like banks and some other corporates to start putting money into Africa and into African companies. So it's like, hey, African investors will step up. Founders are already writing checks in more founders. People that work in companies are writing checks in their friends that are starting new companies. The diaspora community are doing syndicate clubs and rolling funds and investment societies just to put money into more African companies.
And is there any responsibility on the part of young Nigerian founders to continue to boost investor morale?
The startup founders, I also think that, yes, you have an idea, but again, remember that venture capital is a business. That you have an idea doesn't mean people would want to give you money. They want to see how far you can go with that idea. And I think with most VCs that I've met, they also want to see your risk appetite. You have an idea, try to follow that idea up towards building out an MVP. Many VCs will put their money in you when they find out that you put your money in yourself first.
It is very clear young Nigerians are motivated to create homegrown solutions to transform Nigeria's economy, and foreign investors are making big bets on these founders. However, if we would retain more of the wealth they would create, the government, local investors, and founders all have a role to play.
And so, despite all that is wrong with and in Africa, all I see are silver linings. Today, more than ever, young Africans are building the future, and indeed, they are the silver lining.